Hi everyone, it is Wednesday, April 16th. The US stock market just closed. I'd like to review with you a few of the things that we're going to talk about tonight. Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. The first thing I want to talk about is the price action for the NASDAQ. And we talked about it a little bit on Sunday, but I think something is setting up. So we really need to be careful. And we'll be looking at the triple Qs as our ticker. Second item on the agenda are three alternative stocks to look at. We often look at tech stocks, but I think we have to look at other sectors just to find the trade and just to be aware of how the sharks are behaving in different sectors, okay? So the three that I want to review tonight, GDX, which is a gold play. For gold, we've got ExxonMobil, which is our oil energy play. Then we've got MicroStrategy. They renamed themselves just to Strategy, but the reason why we're looking at them is because they are our Bitcoin play. And I've been following and trading these stocks for a while. And then the last part of this video is very important, and it's about trading psychology. And I think we need to start touching more on the psychology of trading. There may be a big move coming, so we need to be prepared as investors and as traders. Okay, so let's get started. You can see here, this is the triple Qs, and you probably remember this diagram from Sunday. The key piece that I want to talk about is the purple trend line. So let me zoom out a little bit. If you recall, I talked about divergence and how the price action up here at the all-time highs was divergent down here on the RSI. Okay, you can always go back to my video on Sunday to review this concept. And I'll be talking about it more over the next many dozen videos. But tonight's focus is what happened right here. Okay, so you can see that, I love dancing. You can see that the price action sold down a couple weeks ago, early April, and quite a bit of volume came back in to buy price back up. Okay, so this green candle was how many millions of shares? About 14, let me see here. It's about 142 million shares, okay, on Wednesday the 9th. So that's a lot of volume. But what you can see is there's this petering out of energy. Now, in normal circumstances, I would say that the likely upcoming move would be bullish because it's right off the trend line, okay? Right off this long-term trend line. Going back, I'll switch to the weekly chart to show you. So it's this one right here. This is the one I'm talking about, right? I have it drawn all the way back. Goodness. Okay. I have it all the way back here to 2000, okay? But that's not the point. The point is it's been a verified trend line over many years. You can see it all around here, where price behaved a certain way and used it as, so here it was resistance, right, up above, like a ceiling. And then when price went above it, it used it as support, like a floor, like a nice foundation to stay above it. But once it came below, it came back attempting to bust through it again, but it was resistance, it was a ceiling, okay? Anyway, this purple trend line is legit. It's been confirmed many times. So here we are. My concern for us as investors in technologies, we want we want the price to go up, right? Because we're in it for the long haul. But we don't have the bullish divergence down here, okay? So to me, this is just price action caused by the sharks wanting to pull all of us small fish into the water. They're kind of like gathering all the tuna up. And they're saying, as sharks, let's throw them a bait, right? Which is this green candle. Throw bait into the water, and we'll pull in all these tuna and then eat them. All right, so I kind of see this circling. So I'm going to see if I can depict somehow, just so that we have some sort of symbol we can use so that you guys are familiar with how I annotate. So I'm going to draw like a circle. Ooh, it's not a circle. Okay, kind of like that. I don't know. But that's my symbol that I'll be using going forward to depict where I think a big move is coming. What's very possible is the near-term action, near-term meaning the next week. It's Easter weekend. I think the market might be closed Monday. I'm not sure. But I think what's going to happen is they're going to continue to throw the bait, and they may bring us all the way up to this. I'll zoom in for you here. To this zone here, which is the 200-day moving average, okay? So they may bring us all the way up here. I'll make it blue, like that, okay? And they'll hit that. But the main thing for us to look at is the volume down here. Are there buyers that will come in and make these volume lines down here, bars, spike? I want to see volume to show conviction that the sharks and the whales, the institutions, the pension funds are really invested in tech, and they're jumping back in together as a group, okay? Otherwise, I think it's really a trap, and we have to be really careful. So you heard it here first, all right? Because I really think in the medium term, after they gobble up all the tuna, is price will indeed go back below the purple line and try to fill this gap down here, okay? And come to the next purple line support, okay? So you heard it here first. So that's the review of the NASDAQ price action. And then let's switch to GDX. Okay, GDX. All right, GDX is a gold miner. Now, the reason why I use GDX for trading is that, one, I feel the stock movement is fairly predictable. It doesn't have too many huge spikes, too many unusual moves. And in fact, the average move isn't that huge per day. Having said all of that, the past week has been out of the ordinary. Okay, so you can see in the chart here some gaps, but I'm going to zoom out first to show you the weekly and then come back and show you what's going on. So from a weekly standpoint, you can see my diagram here. My chart is super messy because it's been a battlefield. I've been tracking it and making annotations. And you've seen some of these charts and my analysis reviewed in videos from a year ago. But since then, I haven't done videos up until this past Sunday. You can see that there is this purple trend line up here, which is very legit. It's been confirmed many times. And let's take a look at where we are now. Okay, so here we are. On the lower left, I want to highlight the time frame. So let's take a look. Time frame is, okay, we've got December, we've got 2024 down here, okay? And you can see this nice trend line going up. But then here, this support line, I'll just make it a little bit thicker for discussion purposes. Yeah, price finally broke underneath after it hit this purple line resistance. Now, let's take a look. Was there divergence? Okay, whoops. In fact, there wasn't. Okay, so see this? There's no divergence here, but it just got rejected off of it. So my, the way I like to teach divergence is the divergence remains until it's broken. So the divergence that we're talking about is actually further back. It's the bullish divergence. And so you can see in this zone here, okay, down here on the RSI, it was bullish. Okay, let's make it green. Okay, it was green. Whereas price is going downward here. Now, if you had gotten an entry around here, awesome for you, because that's close to this bottom support, and you made out like a bandit, okay? For gold, that would have been to where, up to this trend line right here, that's what, 68%. But because there was no bearish divergence here, even though price hit this trend line resistance, there's no divergence here, okay? So even though it was rejected, and if you stayed in the trade, you can see that it came back with additional bullish divergence. So right here, sorry, my eyes see these things so quickly. I suspect that it's a little bit hard for new folks to see it. But you can see that in this zone, from here to here, price is going down. There's divergence here on the RSI, and it recovered off of this other purple trend line. And here we are all the way up here at 52, okay? So if you stayed in the trade all the way up to 52, dang, that would have been a really good trade. 100%. The truth is, I didn't stay in the trade like that because I'm always in and out. But I didn't get 100%, so that's just being honest. All right, so let's see what's most important is the price action now. Is this the time to buy in? Because the news is telling us, hey, gold is at all-time highs, 3,000 plus, whatever it is. Is it time to buy in? And even my dad, he's in his mid-70s, he told me, hey, the stock market is really volatile right now, you know, with this tariff, that tariff. He watches the news all day because he's retired. And he said, maybe you should buy gold. I said, okay, Dad, I'll think about it. And so I looked at the chart, you know. So whenever somebody tells you something, especially somebody like your mom or your grandmother, or your uncle, someone, a cousin that you haven't heard from in ages and tells you to do something, then go look at the chart, okay? Because it's probably some sort of setup that's coming up for you. So let's look. What is the setup for GDX? Well, we can see that it went parabolic. Okay, when price goes parabolic, it leaves a lot of gaps. So I annotated the gaps here, and as I had mentioned in the video from last Sunday, price will always fill the gap. Like, I'm making up a number, 75% of the time it will fill the gap. So that means when you start seeing a lot of gaps, don't follow. I mean, don't be the one who is last to the party, right? Don't be the last to the party because you're going to get smoked. So what I see here is kind of risk off. If you're not already in the trade, go risk off. If you are in the trade, right, and you've made a lot of gains, then maybe consider taking some risk off the table, because even though I don't see divergence, okay, I'm being straight up with you, I don't see divergence. There was divergence here in this zone, right? But price recovered really well. It recovered really well with, decent volume, recovered above the purple trend line, and now it's in uncharted territory. Okay, I can go all the way back. Let's go all the way back to the weekly view. I'm going to go all the way back to, what year is this? To 2012. Okay, so price is in this spot right here. See this 51.91 over here on the right? So that's where price is at this moment. So what I'm having to think about is, do I annotate? All right, I'm going to spitball this. Kind of see if there's like a zone here. So, okay, so I'm going to assume that's a zone. So let's switch it to a horizontal line. This one. I'm going to put it, oops. Sorry. All right, let's put it there. So it's like, okay, not perfect, but I'm going to go like that. And then I'm going to make it thicker. All right, so now let's go to the present time. Hyperspace. All right, so what I'm thinking is, price action may reach that, okay? So how much more do we have? We've got about 3%. So it's possible. It may hit 3% and get rejected. We'll have to see. I have no call on GDX right now. I can't tell you to buy or sell. I can't share my opinion whether I would buy or sell, okay? Because I'm not a financial advisor. But I am not going to buy at this moment. And I might wait to short up here. And some of you haven't heard of that terminology yet. I'll cover it in a different video. But for one of my subscribers, you asked about GDX, and GDX, it's too parabolic for me. I think it's not the right time to buy in. So it is, yeah. All right. So no real call on GDX other than I feel it's coming up to resistance. And maybe I'll draw it like this. I'll make it a pink resistance. Okay, there's resistance up here. And that way we'll be reminded on, actually I'll make it a little bit smaller. Like that. We'll be reminded on the next video. Maybe I'll do GDX next week. And you can see whether or not I was right. Okay, switching to the next one, which is ExxonMobil. This is a really interesting one. Okay, because whoops. All right, so ExxonMobil is the oil company, and it's reached all-time highs, and I will show you here. All-time highs. Okay, what time frame was this? This was like October 24, all-time highs. And zooming out, you can see this purple trend line. This is the weekly chart, by the way. Confirmed many times, okay? So it's hit it many times. 1, 2, 3, fought here, try to reclaim support on top of it here. It didn't work, got rejected again here, got above it, sold back down. I mean, it's a battle, but you can see here, it tried to reclaim it, but it couldn't. Got sold down a lot. Now, as per usual, we always look for divergence. Okay, so let's go back to the daily view. Okay, at all-time highs, everybody got excited. The divergence is a little bit different though, but I'll show you here. Make it red. Okay, so price up above right here. In fact, I need to zoom in more. So at this spot here, which is well, it's not my typical divergence. It's not divergence. Straight up, it's not divergence, but just a plain rejection off this other trend line here. So I went to all-time highs. So let's back up. Where was the divergence? Okay, interesting. So the divergence actually took place back here when it did all-time highs in April of 24. So you can see that there's a tiny bit of divergence here, okay? Okay, so comparatively, on this day right here, price is at this spot, and then it went up for the week, but the RSI went down, okay? There's your divergence. And that's just above the purple trend line. And then it sold down, a lot of fighting. It attempted to reclaim it, and then, sure enough, it got to an all-time high here, okay? Now, look at this. If we were to draw a line from here to here, okay, you can see that price went upward here, but these two peaks, between these two peaks, the RSI, which is the momentum indicator, diverged from price. Okay, so that's why it's red. And then there you go, with the attempt to reclaim it over here. And now we're all the way down here. So why are we looking at this one? Why is this a sector that we want to look at? Because there is sharks. What are the sharks doing? They are circling. Sharks are circling right here. And it's for a medium-term move upward. Okay. In fact, I am in a position. I'm in this position. I'm already long, and here's why. The divergence showed up right here. Okay. So among all of this chaoticness, price started to find support, and it filled this gap. See this yellow box here? It goes all the way back. Goodness, how far back does this go? It goes all the way back to, the date is January 24. Okay, so price filled the gap. Okay, on this candle here, this big green candle. And here's the bullish divergence. Bullish divergence from here to here. And then you can see the sharks and institutions start to come back in to buy. Okay, so price, the momentum's going up. And if you compare this red candle, the bottom of the red candle, comparatively with the bottom of the next red candle, I'm going to make this fatter so you can see it and make it a totally different color. Let's see. How about yellow? Okay. No, let's try something wild. Or this yellow. Okay. So let me zoom in so you can see it. Okay, you see that? So this is a low. This is a lower low. Okay, but here's the divergence down here. The RSI is showing upward, yeah, an upward divergence compared to a downward price action. So with that, and after price regained support on these two levels, the 158 and 190 levels, I bought in. It wasn't a perfect entry. It was probably somewhere up here during the day. And I'm still bullish. So that's my opinion, right? Okay, so I'm going to take this off right there. But I think because of the divergence, bullish divergence, and my feeling about the shark circling, where is my target? Where am I going to get out? So let's see. So let's assume I entered like midway here. Actually, not midway. Usually I don't take a trade in between these lines, right? When you've got lines like this, these two levels here, the 190 level right here and the 104, don't take a trade in the middle, whether you go long or short, because it's the risk reward isn't there. I just don't remember where I took the entry. I would have taken it closer to the trend line, to the support line. Okay, so let's say I took it like right there. Okay. And because you like to play between the lines, right? So if the risk reward is favorable. But what I think is going to happen is they're going to try to fill the gap up here. So the short-term play, because this is, I think the long-term is still further lower prices for ExxonMobil. I think there's going to be an attempt to fill this gap. So when will it happen? I don't know. It might happen out here somewhere for about a 10% move. Okay, not huge. This isn't technology. This is not your NVIDIAs that move fast. But the price action is, at least for me, a little bit easier to read. It's not as hyper. Okay, and then we'll continue to analyze and figure out what to do with it. So if you're considering taking a long, right, because you're like, hey, John's in it, I like his opinion. Well, wait, okay, because you're not going to take a long at this spot where we are today, because you're heading up to resistance. Okay, so what you want to do is you want to wait and permit price to fight a little bit, the buyers and sellers to fight, and then your entry from a risk reward standpoint, right? You would want to wait for price to come above, bounce off this line, and then take an entry, right? Because you're closer to the floor. You're on stable ground. Okay. So I'm gonna annotate it like this for you. A green. Make this green here. So if you're up here, then that's a nice, safer entry, because right now you're heading up to resistance. All right, that's ExxonMobil. And switching to the super volatile MicroStrategy for the Bitcoin play, super volatile. But something is coming, I think. So let's take a look. Why am I saying it's coming? Because there's a heck of a lot of divergence, bullish divergence. Okay. But I'm not convinced yet. So I'm a little bit skeptical, because MicroStrategy and the way Bitcoin moves is super volatile. But I'll show you, because we have to trust the process. So look down here. A lot of bullish divergence, like crazy. Okay. Now, it's sitting, all this support down here is on a gap. So Bitcoin slash MicroStrategy is utilizing this gap that goes all the way back to November, right? And it's using it as support, which is fine. I don't know. I missed the entry. I'm being honest. I missed the entry, because this is where one would have bought in, right? If you were to buy in, you would have bought in at let's say 247, right, on this candle, because here's the divergence. But you wouldn't have known to have bought into this candle because the day's action didn't close yet. So when the price action finally ended on the day, price came all the way up here and recovered this long-term trend line here, this black trend line. So it's up here. It's staying up here, and I'm not convinced yet. My preference is to wait for price to come back down closer to this 200-day moving average, which is here. I'll make it green for the entry, because otherwise we're kind of, I don't know, it's super volatile. So my thought is, yes, bullishness, okay, tons of it. And the reason why I say tons of it is because, you know, whereas ExxonMobil and GDX, those lines, those, my bullish annotation was such a short line, like a couple of days. But look at this. This is from end of February to first week of April. That's a lot of built up energy, okay? Now, one can argue that the energy was already released on this day. This is this past Wednesday, the 9th, last week. You know, this move here, just that day's price action was 25%, okay? So I think a lot of the energy has already been used. Additionally, with yesterday and today's price action, okay, you can see this line here. I drew this one. I'll make it a little bit thicker just so you can see it. 3. Okay, you can see it was resistance here, resistance here, resistance here, and then yet again, yesterday and today, resistance. Right on the noggin. So I think it will hold, and price will continue to come down. This is no longer a gap. I'll get rid of that. But I think it'll come down, hit the 200-day, and we'll see. We'll see if that's an opportunity to go long. I might do that. So let me just annotate it for you guys and for myself, so that we can come back and review my analysis, and you guys can say, hey, you were wrong, or hey, good job. All right, so that would be a opportunity for a long down here at the 200-day. If it busts through the 200-day, then I don't know, it might fill the gap and continue downward. So we'll pay attention to it carefully. All right, so that's my MicroStrategy review. And then let's switch gears and talk about psychology. Let's go back to the triple Qs, because psychology in trading is super important. So my concern for all of us is most of our 401k and independent retirement accounts and pension funds and your pension, and everybody is in it for the long term. We want to go long. But because we've already broken through this purple trend line here, this one that goes back ages, a couple decades, I think. Let's just zoom out real quick. I don't remember. I think I have it all the way back to the 2000s, okay? Super long time. Because of that, because we broke through and we reclaimed it, I feel there's weakness, especially since